Welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses just like you. If you have any questions, ask them in the comments of the live feed. And if you need any more advice, join the official Intuit QuickBooks community group on Facebook with accountants and business experts like myself on hand 24/7. During the live session, we'll be running a poll, so please do engage and I'll send and reveal the results at the end. Okay, so who am I? Well, my name is Aaron Patrick, and it's an absolute pleasure to be with you again. I'm a chartered accountant, a QuickBooks certified trainer with a fancy new logo, so don't be afraid to ask me any QuickBooks related questions. And I also own a state-of-the-art accounting firm called Boffix, which is the best in cloud technology available to help small businesses get the crucial real-time information they need at their fingertips. If you require any accounting advice, payroll, bookkeeping services, and now even QuickBooks training, then please do get in touch. We don't want small business to survive, but to thrive. Also, I have a dedicated QuickBooks YouTube channel called Aaron Patrick, the QuickBooks Chap. So if you need any more QuickBooks news and advice, why not go over and give the channel a follow? Okay, enough about me and let's focus on today's session. As always, this session is all about you and your burning questions. So if you have a question, please use the social channels to get in touch. So while we wait for those first of the questions to arrive, let's talk about the Spring Statement 2022 analysis. Yes, that's right. Rishi got out and dusted off his red briefcase for the spring budget. Although typically the spring budget is always light, we did have some quite significant changes for small businesses just like yourself. So let's talk about that today. The first of the major changes was all about national insurance and the threshold being increased. Well, what does that mean for you? Well, first of all, the two headline grabbing comments arising from the spring statement was the fact that the impact to the personal taxpayers with the increase of lower threshold when national insurance contribution paid in July 2022, and also a reduction in the basic rate of income from 20% to 19% from April 2024. So let's talk about how that let's talk about that in more detail and how it can affect you. Well, first of all, your national insurance contributions. At the moment, it's the end of the tax year, so you should be receiving your P60s or any final salary payments in the 2021 to 2022 tax year, and the national insurance deductions will all have been referenced to a threshold of £9,568 per year. But from April 2022, the earnings will actually be changing and the thresholds will be changing with an increase to 9,980 with the inclusion of a social levy of 1.25%. The Class 1 national insurance will be 13.25% and then 3.25% the higher rate threshold. But the big changes from July 2022, the earnings threshold for employees will increase to 12,570, which if you think about it, is a huge increase from the 9,568, with the other rates remaining the same. I can only imagine the deadline until July is to enable software such as QuickBooks Online Payroll to be updated their systems to take account for these changes. But the idea is that the change should be effective in the next tax year. The change of the threshold where national insurance contributions are paid does not apply to the contribution made by employees, though, which remains at the lower amount of 9,500 from 21-22, but with an update of the impact of that just in a moment. There is a similar change for the self-employed Class 4 national insurance contributions, which you pay by the annual self-assessment tax return, albeit within 9% main tax rate instead of 12%. But with this increase with the self-employed Class 4 national insurance rising to 10.25% from April 2022, 1.25% again. Finally, for self-employed, the next tax year will be slightly more complicated as your national insurance calculation will be on a split year basis for the 2022 to 2023. So maybe another good reason to use QuickBooks Online and making sure that you're using the tax calculation just there to make it more simplified for yourself. Hello, sorry about that. Okay, so what does that all mean to people's net income? So, simple answer is it's saving for most people who are employed or self-employed at that point. But it gives us some options for director salaries, which has the added benefit of reducing your potential corporation tax bill. Personally, I think the director salary is now less clear-cut than it was before, and there's going to be more options that you're going to have to take into account of. But at least with those options, you're going to have the opportunity to make some quite nice tax savings down the line. Best advice for that one, stay tuned to the Boffix YouTube channel, where we're doing a dedicated video based on what the director salary for 2022 to 2023 is going to be all about. Incidentally, the self-employed pay a fixed rate class of class 2 national insurance if their profits exceed thresholds mentioned. So the good news is the increase in thresholds will remove some businesses from paying these contributions whatsoever. So as you can imagine, that's quite a nice taxable benefit going forward. Okay, so the spring statement for 2022 also increased the employment allowance announced. In the spring statement, the Chancellor also made an announcement that the employment allowance was to be increased to its highest ever level of £5,000 per annum, up from £4,000. As announced in April 2020, the employment allowance is restricted to those employees with a secondary class 1 national contribution liability below £100,000 in the previous tax year. But this should still apply for all small businesses out there. Just be really, really careful, though. If you do have some sort of group structure or you have multiple owners, there could be a restriction there for your employment allowance that's been announced. But overall, that's a good thing. That means you have bigger allowances to contribute for. Just remember one thing, though, that there is a number of administrative burdens to get the claim, and the claim has to be submitted each tax year and will not automatically be carried forward from the previous tax year as it was in April 2020 going forward. So if you're eligible, please do not miss out on actually getting yourself that allowance. There's also been some updates to fuel duty changes. As you can imagine, fuel duty was something that was massively something that was hoping for, and it's definitely going to come to a welcome reduction for fuel costs at this point in time. So the fuel duty rates changes from the 23rd of March 2022, so they're already in effect, and basically petrol and diesel will see reductions from 57.95p per litre to 52.95 per litre, and rear diesel will also be reduced as well. Also note that the VAT was charged on the duty inclusive of the fuel, so this change should reduce the amount of VAT due on the time of sale as well. There's also some changes to research and development tax relief scheme announced, and with more significant changes on the horizon. For me, research and development is one of those favorite types of taxes out there. Our clients have found some really significant benefits over the scheme over the years. So anytime there's been some changes, good or bad, it's always worthwhile keeping an eye on it. So the spring statement itself saw the refinement of the anticipated R&D relief taking effect in April 2023. And that brings basically into the idea that there is a restriction on expenditure for UK R&D activities only, but there are going to be some consultations and there should be some exceptions to this proposal. Also confirmed that R&D related cloud computing and data storage costs will be qualifying for the relief, which is a great piece of news. And then finally, VAT was the other area that got announced during the actual spring statement, and homeowners with the solar panels, heat pumps and insulation installed will no longer have to pay 5% VAT. They will now pay 0% VAT. According to the official statement, a typical family having rooftop solar panels installed will save more than £1,000 in total on the installation, and then £300 annually on their energy bills. The changes will take effect from April 2022, which is great news for the consumer, because obviously you guys could have the opportunity to pay less for your solar panels going forward, which is fantastic, but also really, really good news for those businesses as well who are providing those services. It could mean that they actually get themselves a refund for VAT on a quarterly basis, which could be a great cash flow incentive for businesses going forward, and maybe a reason why some of the smaller firms might want to think about actually going VAT registered from day one. So have a think about that one. Again, we'll be doing a separate video on that particular one. So in summary, some big changes to calculation of your taxes. Rishi did
Rich's spring statement may have contained few minor tax changes affecting small and medium-sized businesses, with the promise of more reforms to come in the autumn budget. So do watch this space on that one. And there'll be some timeline. And let's just summarize with a timeline of oncoming tax changes. So March 2022, as I already announced, was that fuel duty on petrol and diesel will be reduced by 5p per litre and is effective for 12 months. April 2022, the employment allowance for small businesses increases to £5,000, which is great news. National insurance increases by 1.25% for employers until the new health and social levy becomes a separate tax in April 2023. So another great news there. The lower profits limit for Class 4 national insurance contribution paid by self-employed increases to 11,908, which is fantastic news. Dividend income tax will be increased by 1.25% as well. Don't forget there's that 0% on solar panels, and VAT on tourism and hospitality returns to the standard of 20%, with that 12.5% temporary reduction ending. If you remember, that was announced back in spring 2021. In July 2022, we get a bit of a complicated tax year because the primary threshold for employees' national insurance contribution increased to 12,570, bringing it into line with the personal tax return. Again, that's probably just to give time for software providers to have opportunity to get everything sorted. And in April 2023, temporary increase in the annual investment allowance to £1 million will end, reducing to 200k instead of happening at the end of December 21 as originally planned, because that was pushed forward in the autumn 2021 budget. So that's a bit of a shame, but it should still be enough of a threshold there for most small businesses to get that annual investment allowance. Corporation tax increase from 19 to 25%, which we spoke about in a previous Ask the Expert. The super deduction and 50% first year allowance will come to an end also in April 2023, which is a shame, but that comes in line with the reduction of the increase of the 25%. Our business rates multiplier is frozen from 50% relief, and everything else will end on April 2023 as well. The research and development adjustments will come through, and then there'll be the lower profits of Class 4 will be gone to 12,570 into line with the new personal allowance. So not having a split year at that point, it'll be continued going forward. The best news is that QuickBooks Online will already have all this calculated for you. So from my personal opinion, having that cloud-based solution will make it really, really easy for you to actually make use of these changes and see these changes happen automatically for you. Things like the VAT, etc., the increase will be done automatically with the percentage. And then the idea that the payroll will be updated in July for you, meaning you don't need to worry too much about it. Self-assessment tax returns, etc., will already be calculated for you, so you can just go in and be able to extract that information. But it does mean that going forward, it means more than ever, you need to be thinking about that real-time information, making sure you're keeping everything up to date on your tax returns and on the software, because a lot of these changes that have been announced here are very time sensitive. So the more you have updated, the more that you're up to date, the more you can take advantage of some of these schemes, especially with those ones that are coming to an end, like super deductions and things like that. Get your accounts in order, keep everything up to date, and I promise you, you will be in a much better position going forward. Also, if you have any further questions or anything about anything we've just talked about, don't forget to reach out to us at Boffix, hello@boffix.com. All right, that's a lot to take in. So let's go to the favorite part of the show and let's talk about the first questions of the day. Remember, if you have any burning questions, get them asked in the comment section of the video and get yourself involved. So the first question that came in then was from Armator on Twitter DM, and he asked the following: is it possible to have my work email set up with QuickBooks so that I can send invoices from it? Well, unfortunately, when you send invoices via QuickBooks itself, it is going to go directly from a generic email address that you send when you go from QuickBooks. But there is options when you do send your invoices out to be able to think about sending them via a different method. Now, currently that's supported is the option of copying a link, and that link can then be put into any form of email address you need to put into or email platform. So if you're using Outlook, Google Mail, whatever you're using, you will then be able to forward that email on and then include that link. And it is a way of sending those invoices that can still have the option to track and have the payment options and everything else that goes with it. The only thing to note from there is that it's quite a longer or more extensive way of sending things. So you might want to start looking at the other options. So you've got WhatsApp, you've got, again, sending directly from QuickBooks itself. So personally, from my point of view, if you want to look at automation, look at ways in which you want to send things much more simplified, you might want to start in looking at ways in which your workflow can be introduced or at least improved so that you can have opportunity to send via QuickBooks Online in a much more simplified manner. Yeah, hopefully from that one, that's answered your question there. But basically, there is a way of doing it. It's just from a workflow point of view. Copying and pasting a link may not be the most satisfying or most efficient way, should I say, for you to continue going forward. So I would highly recommend, if I was you, just thinking about actually doing it on utilizing the solutions within QuickBooks Online itself, adapting your workflow accordingly, and I think you'll be in a much better position. So good luck with that one. Jill on Facebook Messenger asked the following. Last year, we had an employee on statutory maternity pay, SMP. We've been advised that HMRC have not received an EPS. We've tried deleting and resubmitting an EPS. Is there a way to retrieve an old copy of a P60 in QuickBooks Online? There most certainly is. So the best option there is, depending on which QuickBooks you're using or QuickBooks payroll you're using, shall I say, you're either going to be using the basic or you're going to be using the advanced. Either way, though, with both solutions, you can go into the employee itself, and from there, there'll be either the option for other HMRC forms, or there'll be an option for looking at your forms that need to be submitted, looked at, and then in both circumstances, you'll have an option to either email the actual document again to a particular employee, download the document, or you're going to have the option to go in there and actually make sure that they have been submitted to their portal and make sure that they have access to it from there. My personal preference is using the online portal. That way it gives you an opportunity for your employees to be able to go in and do self-service. So if they ever need their P60 or they need a copy of a payslip, they can log into their online portal. They get the option then to be able to get those documents for them whenever they need to. And personally, I find that makes it so much easier, not only for yourself, but also for your employee as well. They get access to that data at any point in time, and also we get the access to it as well. So yeah, highly recommend looking into that one. Highly recommend having a go at putting that or looking into there. And if you do need to resubmit your EPS or anything else and you have any problems with it, then just head over to the help section in QuickBooks Online. That's going to be the best place to go to. They have some really cool tools over in the help section where they'll be able to make sure that things have been submitted, or at least be able to query with HMRC what's been submitted, what hasn't, and then give you some guidance on what to do next. So I always find with payroll, the best thing to do if I'm having any problems, just reach out to the care team. They'll be able to get you sorted really nice and quickly and easily, especially with the fact that depending if you're on basic or if you're on the advanced version, it can be quite tricky to be able to make sure that you're getting the best out or following the right solution to be able to get everything fixed. So yeah, reach out to the care team on that one, but you'll be able to get your P60 nice and easily. Kelly on Instagram DM asked the following. I'm annoyed that they didn't seem to be more support for small businesses in the spring statement. I'm really worried about the rising cost of everything. What could we be doing to migrate this? It's a really, really good question there, Kelly. And I think a lot of people, maybe not annoyed, maybe that's a bit of a more stronger statement, but I think a lot of people were surprised that there wasn't more opportunity or at least more delays for some of the upcoming tax changes that are coming along. But these are the cards that we've been dealt with. Now, the way that we would always recommend looking into trying to mitigate against this is to start focusing on your cash flow going forward. Because at the end of the day, with all these changes that are happening, a lot of things is going to be down to your cash flow in terms of how profitable or how you're going to be able to survive any changes, any increase in costs and everything else that goes with it. Now, thankfully, within QuickBooks Online, cash flow is actually something that's built in directly and something that we can actually fix quite easily as well. So within QuickBooks Online, the cash flow forecasting tool was announced 2 years ago now, and has been an absolute hit for the customers going forward. And this is the sort of thing where cash flow forecasting can be so useful for you, because QuickBooks is going to take all the data you've already got in QuickBooks and make sure everything's already up to date. It's then going to predict going forward any recurring transactions or recurring costs, giving you the option to be able to plan ahead accordingly. And these are the sort of things where the rising cost of everything that's going around, people not happy about it, but people are more expecting that there's going to be cost increases along the board. That means if you need to increase your costs, etc., then this could be a time to at least look into if that's going to be plausible or not. And the idea of using a cash flow forecasting tool means that you can decide at what point you can actually increase money or increase your income to, or increase your sales to, or increase your actual service cost to be able to accommodate for any increase of prices. The worst thing you can be doing at this point in time is doing incremental increases or increases that are going to happen on a regular basis. So if you can try and hit it with one foul swoop and increase those prices, something that's going to give you the opportunity to make sure that you're still going to survive and you're still going to have the opportunity to be able to do business going forward, and that's going to be the right thing to do. But again, you're not going to know what that increase needs to be unless you do some actual research, look into cash flow forecasting, look into what's actually happened within your business, look at those costs that have been associated, and try and find a way where you can actually make sure that you've got that income going forward. So I do highly recommend for yourself to look at doing some cash flow forecasting, have a look and see if there's any opportunity for you to increase your income and see if there's ways you can actually mitigate against it. The other thing as well is just make advantage of those tax savings that have been announced. So the opportunity for that employer's increase. So if you're on direct salary, maybe there's going to be opportunity to change elements like that. All those little things there are going to add up. And again, the best thing to do is making sure that you're using QuickBooks Online to its fullest, make sure you've got real-time information, and you're going to be able to make those decisions with the best possible data available. So good luck with that, Kelly. Hopefully, fingers crossed for you, you'll be able to find a way to at least mitigate against some of these increased costs that are coming forward. Jake on Twitter DM asks the following: I don't quite understand the employer allowance relief changes. I have a staff of around 6 and I currently make NIC contributions for them. Will this save me money? In the short answer, Jake, yes, it will save you money. Do remember, though, there is increases to employee contributions coming forward in terms of that levy, so the whole 1.25%. So yes, you'll be saving, but at the same time, you might have more costs coming forward. We've not yet to see how much of a kind of impact that's going to affect, but depending on your circumstances, you may well find that at least you won't have to pay for the first £5,000, which is up from £4,000 that it currently was. Now, the one thing to remember about this particular relief, though, is it's not given automatically. It is something that, from an administration point of view, you're going to have to apply for it. So make sure that you've got all your ducks in a row. Make sure you've applied for the allowance, the employment allowance, if you are eligible for it. And make sure that you've got the opportunity to go in there and be able to grab the income as needed, or the relief as needed. So what I would highly recommend you do is, first of all, look and see if you're eligible for it. By the sounds of it, you may or may not use it last year. So if you have, this is your last chance to claim for it for this year as well. So see if you can put it in and put the claim in as well for this year. But then going forward, that should give you the opportunity to go in there and be able to make sure that you've got the claim in place and that you're utilising that allowance. Having the opportunity to have £5,000 of tax-free anything is always going to be a benefit to you. And when it comes to your staff costs, it's a huge, huge savings for you. So I highly recommend that you jump in and grab that if applicable for you. So yeah, Jake, have a go on that one. See if that's going to be eligible for you, and that should give you the chance to bring that on. Andrew on Facebook Messenger asks the following: there's an exemption on business rates for given technology that's been brought forward. Does this mean your business has to be creating green technology, or does it mean we can modernize our heating and electronic infrastructure for cheaper? Now, for this one, it is very, very particular in how that claim is available to you. So my best advice for that one is to go on to your or to your local council, look at your rates and see what their eligibility rates are going to be. From what I've known, or from what I can see going forward, it is going to be more of a kind of standardized process in terms of applying for it. But being business rates, there could be ways in which that each individual council or each individual province will have the opportunity to have their own claim or their own opportunity to be able to change, to be able to apply for it. So your best option is going to be is to talk to your local authority and see what the options are there. They may well have a standardized method and it may well be the same nationally, but we've seen before that it's not the case. So the best thing for you to do is talk to them individually, talk to your local council, see who you pay the rates to as it is now, and see what options they have and what eligibility they've got, and everything else is going to go with it. Because the ultimate point is going to be that if you are eligible for it, you're going to need to find out how to apply for it. So the best thing to do is just go through them and see if you hit their criteria from there. So hopefully, Andrew, that solves that question for you. But yeah, like with anything to do with rates and everything else, and local reliefs and everything else, you really just need to reach out to your local in a constituency and be able to talk to them about it going forward. Carl on Twitter DM asks the following: I'm happy to hear of any cut on fuel duty, as we have a fleet of vans that travel out to different jobs. But with prices rising, will it make much of a difference? Well, funnily, it's a difficult one to completely ascertain on that one, isn't it? The fuel duty change is definitely going to be a nice relief for it, albeit it's not forever. There's only a temporary reduction on it, but it is something that also compounds where we should be paying less VAT on it as well, with the fact that you do the calculations and the 5p that gets reduced. So in theory, we should see a reduction in the costs, and we should see a reduction going forward. But it's kind of not 100% understand how much of an effect it's going to be. It seems that every single day at the moment there's been a rise in some sort of cost related to fuel. So hopefully, fingers crossed, that this will give at least an option to minimise that rise and give you an opportunity to go for it. Like we said in some of those other questions, though, Carl, I think this is more importantly than anything else, with the fact that there is increase of costs coming forward. I think this is a real good opportunity for you to look at your cash flow forecasting, look at the opportunities that you've got there, and see if there's any way that you can kind of increase your income to go through and associate with it. So, this could be the opportunity for you to go in and look at raising those prices a little bit more, or at least looking ways to combat your income and your sales price to be able to affect it accordingly. At the end of the day, unfortunately, with an increase of prices, as I said before, people aren't happy about it, but they're kind of expecting costs to go up. So maybe this is a chance for you to look at it and see how that's going to go forward. We are running to 9:05 today due to the technical difficulties, so we've got time for one more question. And Ollie on Instagram DM asked the following: when I input on QuickBooks payment to HMRC that are for national insurance, PAY and CIS tax, what category do they come under? Are they expense or a other current liability? Well, that's a really good question there, Ollie. So just to put some context to that one, basically when you're going through QuickBooks Online, you're sitting there trying to allocate your costs or your expenses to various different categories. And the way that QuickBooks Online is kind of working is that you want to be putting the right cost against the right categories to make sure that everything's calculated. Again, from a QuickBooks point of view, or from going forward point of view, it really is important that you're on that real-time information bandwagon. So the fact that, Carl, you are or Ollie, sorry, you are looking at trying to make sure that you are on top of that is a really, really good thing. And it's something that I would highly recommend and highly kind of recommend you go forward, carrying on doing what you're doing. Now, in this particular case, when you're looking at whereabouts to put your particular payments, or a payment to a tax should definitely always go to what we would call your balance sheet. So as you explained there, your other current liabilities. The reason for that is the expense element. So each of those taxes you mentioned there is a potential that there is an expense to your business, so the employer's side of things. Well, all of those costs should automatically be allocated to the profit and loss for you, especially if you're using QuickBooks Payroll. That will automatically do the journals for you. You don't even need to worry about it, which is wonderful. So anytime that you make the payments towards it, you've already allocated, you've already accounted for that in the system. Therefore, all you're doing is you're matching off what you've accounted for and allocated against what was physically paid. So that's why we put it to what we call your balance sheet, or as you've said, your other liabilities. And the idea then is that going against there gives you a running total of what your liability was compared to what you paid. And then the difference between the two is how much you may already owe, or in some circumstances, how much HMRC owe to you. So highly recommend that you kind of go through that in a little bit more detail. Give the option to go through and add those expenses in, or have an option to go through and put those liabilities together, and that should give you the chance to to be able to at least see a running total for you. And then what I always tend to do is, just once you've made that first payment against it, go into your report section, have a look at your balance sheet, have a look at what you've just made that payment to. And what you should be able to do is be able to, what we would call, reconcile that figure. So whatever amount is still left on that balance sheet, that should be a figure that should be recognizable to you. So if it's 0, that means you've paid all your dues and there's nothing left to pay. That's probably a really easy way of being able to reconcile it. But if there is a figure in there, that should represent what's owed to you or what you owe to HMRC, whichever way around it's going to be. And that should be something that you should have at least an opportunity to be able to have a good understanding of, because at the end of the day, you need to be on top of what taxes you owe. Now, one of the tips you can do is jump into your online HMRC portal. That should give you a statement of what's due or what's due to you at that point in time, and then you can match up the two. That's a really nice, quick and easy way to reconcile it, and that's a really quick way for you to get confidence as well on those figures. So highly recommend you jumping into your report section, have a look at your balance sheet and see if you can find those elements you're talking about. So from here, your CIS, PAYE, all under those other current liabilities, have a look at those balances, make sure you can justify them, make sure that you're happy with the figures that are left there, and that's going to give you confidence that your figures in QuickBooks Online is correct. Reconciling your balance sheet is the best possible way you can do things when you're a little bit unsure about where things go, because at the end of the day, if your balance sheet's correct, then the rest of your information in QuickBooks is pretty much going to be there. So good luck with that one, Ollie. Hopefully that answers your question, and then hopefully you'll also be able to have more confidence going forward with it. All right, with that is the end of the questions. But before we go, we've got poll results that came through. So do you think do you think you'll feel the benefit of the spring statement? We had just over 80% of you say no, which is a real big shame there, because there are quite a few elements in that spring statement which will help mitigate against some of the increases that are coming forward. So hopefully from today you've been able to see there are some changes there that are for the good. And then just around about 20% of you answered not sure. Again, utilizing today's platform hopefully gives you a bit more confidence and a bit more reassurance there are some good changes that are coming your way. Thank you all for tuning in this morning. If you would like to get in contact with me, then please do email me at hello@boffix.com or follow me on my YouTube channel, because that's always a good place to get in touch with me. Coming up on Ask the Expert tomorrow is a communication specialist, pitch coach and founder of the I Am Hub, Jenna Davis. Tune in to learn how to regain your confidence ahead of an in-person presentation. Highly recommend you jump in on that one. Jenna's brought some great content to Ask the Expert over the past couple of years, and I can definitely guarantee that tomorrow's going to be absolutely no different, and you're going to pick up some great elements there. It's going to help you push forward. A reminder that if you need any more advice, then please do join the official Intuit QuickBooks SME community group on Facebook. Accountants and business experts just like myself are on hand 24/7. I've really enjoyed answering your questions this morning. Hopefully we'll see you in a video pretty soon, and have a great day. Bye for now.